So you were one of the few people that saw Donald Trump winning the presidency. That would seem to be a huge blind spot for everybody. Do you think that blind spot still exists?
Well, it might exist. For right now, you have somebody announcing on the other side of the field sort of every day. In fact, I was talking the other day, I expect almost 10% of the Democrat Senate to run for president. 8 to 10% of the existing Democrat Senate will be in the race. So sooner or later, there'll actually be a person against a person. Right now, there's a person against a hope and an ideal. And so I think it's too early to tell. We're going to have to see the attributes of the actual choice we have.
And from a purely economic standpoint, what is the most important thing from a presidential candidate?
Well, look, as I always say, the United States should be a bastion of free markets, and deregulation is great for the economy. And so people get all involved in personalities, but which direction the train is going is sometimes more important than, how loud and obnoxious the conductor is.
So free markets, is there something that you think both the left and the right should agree on that they don't agree on right now?
Sure, deregulation, free markets. I think, I expect we'll talk about it, but we're going to have a big, I bet, debate in this race about tax rates. And I think they're fundamentally going to pull in different directions.
And everybody's talking about AOC's proposed 70% marginal tax rate. What do you think are the economic implications of that?
Well, look, it's ultimately going to get fought. The marginal rate has to go to start at 253, 350,000, whatever the sloganeering is. In order to get any money out of the U.S. population, the marginal rate always ends up being debated right around $250,000, $300,000. So, look, if you impose a 70% tax rate on that type of wage earner, you're going to crush the economy.
But at $10 million?
There's no money there. Maybe we should do 99% at 10 million. I don't know. There's no money. There's no policy there. So it's going to be decided at the 250 to 350 rate. That'll be the only decision will be where in that band you put extremely high marginal rates, because that's where the money is. And we might as well talk about that early.
And looking at the markets, are there any places that you think are over leveraged or are in danger?
Yeah, I don't think I think there's leverage in the system inherent in lots of financial products. I think it's hard to find because some of it is back leverage. Some of it's places people find new places to put leverage all the time. Look, I don't think it's 2008 because our financial system and our financial companies are more stable. But I think you'll find more leverage in the system if there's a sustained downturn than most people think.
Are there any market dynamics that are leading to that, or can you hint at which pockets there might be leverage hiding?
Yeah, low returns. Look, when most people are earning, when 4 or 5% is the risk-free return, or 2 or 3%, there's a lot of people who want to kind of try to juice that to 3 or 4%. And so you back leverage it, and you put leverage in places to just get an incremental 1 or 2%. So at these low rates, people do things to boost rates that they might regret in a different environment.
And where do you think valuations are?
They're okay. I think we're, tell me what happens next year in the economy. I think if we don't have a downturn and we keep policy at low tax rates, high growth, deregulation, I think we're in the range.
And what would hurt the economy the most?
I think a real change in the regulatory environment. I look, behind the scenes, I think people don't realize that the deregulation has activated expansionary policy at all companies. That's why we're at 4% unemployment. People are expanding and capital is coming back to the U.S. If the U.S. is friendly to capital, there's no place in the world everybody would rather put their money. And we used to be the bastion of free market capitalism, and if we continue to do it, we'll have our outsized investment.
And does that matter at all if we're friendly to other countries?
Look, I think we are friendly. The funny part here is each country has their crisis going on. I think we're so inwardly focused. France has a crisis going on about who's looking after their middle class. England, obviously, with Brexit. I think you're going to see India have an interesting election about who's looking out for the middle class. Brazil just had a big election. So the one thing is, if everybody represents themselves and negotiates fairly with other countries, I think there'll be a good outcome. But everybody has to focus a little bit on their own country.
And you've been in banking forever, and you started your own banking firm. How much has banking changed since the financial crisis, like the actual culture and being in banking?
tremendously. And a lot of it is regulatory. A lot of it is awareness of conflict, and we've benefited a lot from people very focused on conflict of interest. But a lot is technological. I mean, a lot of things that used to be done human to human are extremely more efficient done machine to machine, and it's radically changing the profitability of financial institutions.
And for the actual investment bankers that you hire, are there different skills you're looking for, and is it a different work environment than it was 15 years ago?
Yeah, it's different, but the key element, and I'll tell you, you could see it, you have to be willing to work hard. Look, it's just people hire us and they want us to work hard. But number one, they want to trust us. Trust and integrity, and that's a baseline entry point. And it takes a long time. So that is also the cycle with technology now at some of the big firms. They don't have enough time to establish it. And it takes a lot of years and to establish a feeling of trust, loyalty, and confidentiality.
Does banking still get the best and the brightest right out of college or out of business school?
I think so. I think we're still right up there. I get the attraction of technology, and I see it in my own. I have 4 children, and I see the attraction of technology. But really, if you want to change, young people always say they want to change the world. And I think the leverage you have in a financial role is way more than people understand. That when you're sitting in the room with CEOs and executives and boards, it's quite an exhilarating place to be. And I think we could do a better job of explaining that to young people.